Adobe just reported a fantastic Q1 of 2023, and it just shows how good and resilient Adobe's business is. So for investors like you and me, those are exactly the companies that we should be interested in and that we should be looking into. So my plan for today is to look into the Q1 of 2023 with you guys and see what we can learn from this report. So with no further ado, let's jump right into it. On the 15th of March, Adobe reported its Q1 of 2023, and it blew away all expectations because they grew year over year 13%. Now 13% is on a constant currency basis, so it takes out fluctuations in different currencies, in the US dollars and so on, wherever in the world they're selling their products. If we don't take that into account, they grew only by roughly around 9%, which is still fantastic growth. And that growth translates into a quarterly revenue of 4.66 billion US dollars. This was an absolute blowout quarter for Adobe. They did really good, and they also say that throughout 2023 they will be able to continue with this revenue. They're saying that they even might grow it a little bit, but being conservative on the channel, if they can continue with this kind of revenue level, they will be making roughly around $18.64 billion in revenue for the full year of 2023. And if we compare that with their market cap at the moment, which is roughly around 162 billion, we come to a price to sales of roughly around 8.7. Now, 8.7 sounds relatively high, but if we compare it to a historical level, that is really low. Those are numbers that we haven't seen since 2014, and we can see that those are really, cheap price to sales ratios for Adobe. So from a price to sales ratio, it definitely makes sense to look into Adobe at the moment. Then having a look into their earnings per share, we see that their GAAP earnings per share came in at 2.7 US dollars and their non-GAAP came in at 3.8. Today we'll be mainly focusing on the GAAP EPS because it makes sense from a comparative basis to use one standard that all companies are using. So again, annualizing those EPS of 2.71, we get to an annual earnings per share of roughly 10.5. Now, if we compare that again with the share price at the moment, which is roughly around 353, we get to a PE ratio of around 37. Now, again, also here, 37 sounds high for an average company, but for the quality and growth that Adobe has, 37 is not extremely high. And if we look at it again on a historical basis, we also see that it's in fact a very cheap PE ratio for Adobe, because the average PE ratio has traditionally been somewhere at around 50, and we see that now we have that discrepancy between 50 and the 37 that we've just mentioned. So from a PE aspect and from a price to sales aspect, both look very attractive for Adobe at the moment. My third and last measure is free cash flow. If you follow the channel, you know that free cash flow is one of my favorite measures because it just clearly shows how much hard cash is in the company and how much cash is left over after most important things are paid. And also here, Adobe just shines. It's beautiful. Have a look at this. They have net cash provided by operating activities of roughly 1.7 billion US dollars, and they only have to pay around 100 million in capex. 100 million. It's nothing. Adobe is a company that basically doesn't have to invest anything into equipment, into buildings, machinery, and so on, because it's a very software heavy company. The only thing they probably have to do is buy a new computer once in a while, and that's it, right? So this is really good. So they in fact have a free cash flow of roughly around 1.6 billion US dollars. And obviously they don't know what to do with that money, right? No place to put it. They don't have to invest in it, and that money is just coming in quarter after quarter after quarter. So the only thing that they can do, and the only thing of course they want to do with it, is repurchasing stock. And they've repurchased in the recent quarter 1.4 billion US dollar worth of stock. And they still have the ability to purchase shares of additional 5 billion. This is absolutely great, and those are really businesses that I like to see. They also paid down some debt of 500 million, which is fantastic in the current, economic environment where borrowings become more expensive and where debt becomes more expensive. So from my point of view, Adobe is really doing a fantastic job. And if you want to have a business like that, now is a great opportunity to get into Adobe. For full disclosure, I am owning Adobe in my portfolio. I think it's a great business. It's continuing to grow. We said revenues are growing, earnings are growing, and also their free cash flow is there. Great business. Thank you very much for tuning in. I hope you enjoyed it, and see you back next time.